Hey guys, Ron Parks here and welcome back to the channel. I hope you have all been doing great. I want to go over the 8 insurance policies that you must have, no matter what your age. I know that we don't spend a lot of time thinking about what ifs, like what if I lost my job? Or what if my apartment gets robbed? Or what if I die and who will take care of my family? It is great to focus on all the positive things going on in our lives, but it is scary and frankly a downer to think about all these things that can go wrong. But since we're talking about building wealth and managing your finances, one of the best things you can do to save money and have security in the future is to have a solution. And one of those solutions is insurance. Boring topic? Well, I will try and make it as easy and quick as possible. Some of the plans I will talk about are really not on the top of people's radar because you're either young and don't think you'll get sick or injured, or you haven't heard about them, or you don't understand their importance. So let's go over the 8 plans you should consider getting now, no matter your age. Some of these plans are only accessible when you are young, so it is important to keep that in mind as we discuss. Okay, so number 1, health insurance. According to the Kaiser Family Foundation, medical debt contributes to nearly half of all bankruptcies in the US. If you're uninsured, you're leaving yourself vulnerable to financial disaster. We all think we're invincible, but one unexpected major medical emergency could amount to hundreds of thousands, if not millions of dollars of expenses. Don't put yourself in that situation. The high cost of medical insurance really isn't an excuse to go without coverage. If you're on a tight budget, one option is a high deductible health insurance plan. With a high deductible plan, you're responsible for more of your upfront healthcare costs, but you'll pay a lower monthly premium. High deductible plans also qualify you to open up an HSA, a health savings account, which is a tax-advantaged savings account specifically for paying for medical expenses. Some benefits of HSAs include it's tax deductible. You can deduct your HSA contributions from your gross pay or your business income. There's also tax-free growth. You can invest the funds you contribute to your HSA, and they grow tax-free to use now or in the future, very similar to your IRA account. And the best benefit is that all the withdrawals are tax-free. So you can use the money tax-free on qualified medical expenses like health insurance, deductibles, vision, and dental expenses. Now, some companies offer high deductible health plans with HSA accounts, as well as traditional health insurance plans. To qualify, your health plan also needs to conform to some out-of-pocket maximums. For 2020, the out-of-pocket maximum for an HSA qualified health plan cannot be more than $6,900 for yourself or $13,800 for family coverage. So compare your options and see if a high deductible plan could end up saving you money. Okay, number 2, long-term disability. Long-term disability plan is one of the best insurance plans to get when you're young. Your most valuable asset isn't your house or your car or your retirement account. It's your ability to make a living. And disability insurance pays a portion of your income if you can't work for an extended period of time because of an illness or an injury. And everybody who relies on a paycheck should have this coverage. The chance of missing months or years of work because of an injury or illness may seem remote, especially if you're young and healthy and you work at a desk. But more than 25% of 20-year-olds will experience a disability for 90 days or more before they reach 67. Back injuries, cancer, heart attacks, and diabetes are the principal illnesses that lead to a claim, not a horrible accident where you have a spinal cord injury or you need a limb amputated. Long-term disability insurance protects you from loss of income if you're unable to work. The odds are too high for you to skimp on long-term disability insurance. If you're in your prime wage-earning years, a permanent disability could potentially derail your dreams of home ownership or paying for your kids' college. So don't skimp on the insurance. If your employer covers this, that's great. If not, find a policy. There is also a short-term disability policy designed to fill in income gaps caused by illness or injury that keeps you out of work for, let's say, 3 or 6 months. Now that's insurance you could skip, especially when you have a fully funded emergency account to cover emergency expenses. Number 3, long-term care insurance. Long-term care insurance covers a range of services like nursing home care, in-home help with basic personal tasks like bathing, grooming, and eating. And usually long-term care refers to an ongoing assistance for those who have a chronic illness or disability. It's expensive, and long-term care costs are generally not covered by Medicare or your standard policy. So who really needs long-term care? To protect your retirement savings from the expenses of long-term care, get long-term care coverage no later than age 60. And remember that while you're not likely to need long-term care before then, many factors like your health, family history, and your finances go into the decision when to buy long-term care insurance. Even if you're not close to 60, your parents might be. So take time to investigate their long-term care options also. Number 4, auto insurance. Never drive around uninsured. Not just because it's against the law, but also because the Insurance Information Institute says that an average claim on a car is $4,900. So imagine having to pay that kind of money out of pocket. Now there are several options when you get an insurance policy for a car. One is liability coverage. If you're responsible for an accident, your liability coverage will cover the cost of any injuries or property damage. Now, most states require you to carry a minimum amount of coverage, so check with your insurance agent to understand your basic requirements. There's also collision coverage. This covers the cost to repair or replace your car if it's damaged or destroyed in a wreck. This part of the premium is the highest and most expensive. And then there's comprehensive coverage. Now, this level of insurance covers your losses that are not caused by a collision, such as theft, vandalism, flood, fire, you name it. An insurance broker is a great resource as they can shop around to many insurance carriers to get you the best deal. You determine the level of protection you need based upon the type of car you drive and your financial situation. Now moving on to number 5, an umbrella policy. An umbrella policy is a type of insurance that adds an extra layer of protection for you and your assets when you need coverage that exceeds the limits of your homeowners or your auto insurance. For example, if you're at fault for a multiple vehicle accident, medical bills and property damages can quickly add up to more than your auto insurance will cover. And if you're sued for the difference, your savings, your home, and even your future wages could be at stake. But you can protect yourself from a situation like this with a personal liability umbrella policy. If you have a net worth of $500,000 or more, it will only cost you a few $100s a year. And an umbrella policy can increase your liability coverage from the standard $500,000 to up to $5 million. Number 6, homeowners or renters insurance. So be sure that your homeowner's policy includes extended dwelling coverage. Extended dwelling coverage adds an extra layer of protection above your policy limits. And with this coverage, the insurance company will replace or rebuild your home, even if the cost exceeds your policy's coverage. Now there's a limit to how much they'll pay, usually 20 to 25% above the amount you're insured for, unless you opt into more coverage. But keep in mind, the higher your home's value, the higher you need an extended dwelling coverage policy. I would check with your insurance agent about what your policy covers. For example, flood insurance. Most homeowners don't know that flood insurance is excluded from their policies. Flood insurance is also different from water damage to your property, so I would ask your insurance broker to take a look, and especially if you're in flood zone, you need to get flood insurance. And earthquake coverage. So depending on where you live, like if you live in California, which I do, earthquake coverage is, well, not included in your regular policy, but it could come in really handy. And if you're a renter, you're not off the hook for insurance. So without renter's insurance, it's up to you to replace your belongings if they're lost in a fire, flood, or burglary. Renter's insurance is very inexpensive, but if you have a full emergency fund set up, well, you can take a higher deductible and lower the premium on your policy to save money. Number 7, term life and whole life insurance. Many of us take life insurance too lightly. The Insurance Information Institute reports that 40% of all Americans carry no life insurance. It's not pleasant to think about, but if you were to pass away unexpectedly, Who would provide for your spouse and your children? With a policy of 10 to 14 times your annual income, your family won't have to worry about making ends meet, losing their home, or worse. And make this a priority. It's affordable and will provide priceless security for your family and for you. When you shop for life insurance, don't forget, term life insurance is always a much better deal than whole life insurance. Term life insurance is only good for the term of the policy, usually year to year, and your premiums will increase as you age. But with a whole life policy, you lock in the premiums when you're healthy and young, and they won't increase. You will also build up some cash value in the policy every year, and that can be used as a loan, or you can add more insurance to your policy. And what if you're single? If you have large debts and no savings, consider a small term life insurance policy. A healthy 30-year-old can easily find an affordable policy that will pay off your debts and cover some of your burial expenses. And if you have little debt and you have an emergency fund, then you can hold off on this. But remember, as you get older, it gets more expensive and difficult to get insurance. And the last insurance policy to think about is identity theft protection. According to LifeLock, criminals can open accounts, take out payday loans, and file tax returns in your name. In 2019, there was a victim of identity theft every 3 seconds. Cybercrime and identity fraud are real threats, even if you're careful about protecting your personal information. With a few important bits of information about you, criminals have all they need to ruin your finances by taking out a mortgage in your name, receiving medical care, or filing a false tax return. And cleaning up an identity fraud situation could take years to handle on your own. So make sure your insurance includes restoration services that assign a qualified counselor to clean up the mess. Now, to summarize, there are lots of policies you can get, but your specific situation will dictate which ones you should start with. As a rule of thumb, health insurance and car insurance are a must. And for all of these insurance products, it's best to get an insurance agent from one of the major carriers, or better yet, get an insurance broker that will be able to compare and shop around for you. There are lots of insurance policy scams in the marketplace, and you need to trust someone who will steer you away from the bad policies to the good ones. I hope this information was helpful, and I would really appreciate it if you can smash the like button for the YouTube algorithm and subscribe. And as always, any comments are appreciated and suggestions for future videos. So until next time,